Hi, this is Amigo with the Bulletin Board Heroes here at Zach's Traders Cafe, the weekend edition for Sunday, the 30th of November. Starting off with the FTSE 100, which had a nice end to the week through 9,700. We were looking for a minimum 9,700, 9,750, which basically echoes the support and resistance on the way up that we had before the record peak that we had back at the early part of this month. I think we were on to around the 99.30 level. And current situation is we're looking for the top of that rising trend channel at 10,000 by the end of next month, perhaps into January, but that kind of thing. And looking for that at least while we're above the 50-day line there at 95.53. Ideally, we now stay above around the 96.50 zone. Let's say that's Wednesday's support for this market. RSI at 57, so just in the right place for further moves to the upside. And you can see that since June, we basically had the low 40s as the RSI support zone. And that's worked for this time, although previously September, October was actually nearer to the normal 50 level. 200-day line also rising, so that gives a backbone to the current rise. And as you can see, basically since April or the beginning of May, we've had the 50-day line act as support for this market, apart from the odd slight overshoot to the downside. Moving on to the DAX, and here you can see that we are back above the 200-day line there, 23,500, let's call it. Looking to break that line of resistance there from the beginning of last month, which is currently running through around the 24,300 level. That's our initial target above that, looking for the top of the channel there, as high as 26,000 by the end of next month. Probably now more realistically the end of January, but the key here, staying above the 200-day line. Worst case is that we've got to test the floor of that April channel, 23,300, before we head higher again. RSI at 51, just under 52, so on the right side of neutral 50. Anything left, perhaps, if you're fussy, is to wait for an end-of-day close above the now rising 50-day line again. But looks as though this market's done enough to prove its mettle in terms of continuing or resuming the rally after that minor bear trap below the 23,000 level. The Dow is next, and here we've got a situation where we are rushing towards the top of that, or apparently rushing towards the top of that rising trend channel from back in February, the level there around 48,800. So looking for that by the end of next month, certainly while we're above the rising 50-day line, 46,700. There is a rug pull, then it would be back to the floor of the channel, the uptrend line there from June at 46,000, but not really expecting that now, given that with the RSI is on its way up to 59 and we've had a reasonable bear trap rebound from below the early November support there around 46,400. Cryptos are next, and here you have a situation where we've been trying to recover here for the Bitcoin. Looks as though probably just in terms of intuitively, you'd say, well, just 75 to 80,000, that's been the support for this year, and that was tested earlier this month. We've also got the overshoot to the downside below that uptrend line there from March at 87,000. It's above 87,000, expecting this market to get back above 93,000, the old April-May support, and break that resistance line there from October. That should be the starting gun on a new move to the upside through 94,000, then up to the 50-day line there at 102. RSI still below neutral 50, so you could, if you were cautious, wait for a break of that line to prove that this market is not just having a sort of a bear market rebound, but is actually back in business. Worst case here, it would be that we have to test the floor of the nominal floor of that rising trend channel from the summer of last year, around 76,000, but already looks as though one could probably adjust that line up to where I've just drawn it now and say that the channel is actually like that rather than back down at 76,000. But ideally, we stay above the mid-80s and go up from there. Ethereum is next, and here there was a question as to whether this market could hold on to the 3,000 level. Still a bit of a question in the sense that seems to have seen that resistance line there from the end, or rather the early part of October. That's around 3,100. So we want to see a proper end-of-day close above that to then open up the prospect of a move back up to the 50 and 200-day moving averages area at 3,500. But there is a positive here in terms of the RSI, which is always a leading indicator on the upside. We've actually broken that resistance line there from the end of July, and that could be the sign that we're actually on our way already, and bulls would already be taking note of that particular factor. Gold is next, and here you can see that we are also hitting a resistance line, in this case one from last month, but just below it actually at around 4180, so an end of day close above 4180. We could be on our way to 4600 as soon as the end of this year. The 4600 level derived by a 1-year resistance line projection shown in red. Might be worth looking at silver, as I see from some people that it's had a good week over the last week. You can see that we've broken 2 new highs, so obviously it's rather obvious that we've had a good week. Current situation is that we're looking for the latest trajectory, which I'm about to draw at the moment, and that would be a progress within a rising trend channel from the beginning of October. The top of the channel there heading towards the sort of 59.60 level. So hopefully looking for that over the next few sessions. Greater target to shoot for would be the line I'm about to draw here, which is heading towards the 66 zone. But let's wait for the end of next month maybe before that might be hit. Upside certainly valid here while we're above the recent support area around that $52 mark. We had an RSI 50 rebound ahead of this move, so the technicals certainly working on that. Moving on to the stocks, and here you can see that we don't really want to look at Amigo, but apparently there are positive machinations going on around in the background. We've had, I suppose, RSI support in the upper 40s around the 50 level, and we've also had a higher RSI rebound, RSI 50 plus rebound, as I call it, in the last few days. That suggests that we will break the 0.5 pence level. Best case scenario target here up to 0.83 pence. But again, don't ask me about the fundamentals, because obviously this stock has been an absolute car crash, and presumably other than somebody trying to use the shell for their own new purposes, it's difficult to see how this situation will revive. But presumably somebody is on that at the moment. Very pleased to see that Ajax has worked in terms of the technicals. We've hit the first target we had there at 7.25 pence, above 7.25. It's difficult to work out exactly what the upside may be. I'm looking for 12 to 13 pence, which is a May resistance line projection, and looking for that as soon as the end of the next month. The reason for that is because look at those candles, all blue, either flat or blue in the recent past. Really looks as though a re-rate is on its way, or is actually underway already over there, and we know that the company is jamming itself full of really high value assets bought at a cheap price. Audioboom is next, and I suppose that comes really in the wake of the ongoing candy victory that we're seeing in court at the moment. The reason is that Audioboom was involved in the whole Bonnier candy experience, and maybe with that cleared up, Audioboom is set to go. The broken resistance line there around 610 pence. Above that, we're looking for £9, perhaps as soon as the end of next month, presuming that the pesky seller, who has been in this stock all the while over the last 2-3 years, is finding out or will decide not to keep selling over the near term. But certainly while we're above the £6 area, looking for £9 on Audioboom. Onto European metals, we're just really commenting on how so many smart people seem to be buying into the shares from, let's say, late September, early October. We had support at a rising 50-day line, and obviously, even ahead of Friday's announcement, there was buying in the stock. So somebody well informed there, an RSI 50 plus rebound ahead of the move on Friday. For those who are already in it and want to know what the best case scenario target here is, should be at least 24, especially given the way that the situation with the company now, in the wake of Friday's events, is rather better than it was in March. Ferrexpo is next, and that's our favorite Russia-Ukraine play or proxy. And here we've got a rising, what I call a rising mid-move consolidation, bull flag, and gapped up through or above the 200-day moving average. Best case scenario target here, in fact, not even, probably even actually better than the line I've drawn, so maybe even up to the low 90s while we remain on the right side of recent support at 68 pence. So the old target there hit at 65 and now above 68, looking for the low 90s maybe by the end of next month. Obviously, that has ramifications for what is going on in Ukraine. GS Chain, another favorite here, and here it's lived up to the charting here. We gap through resistance through around the 0.38 level. Above that, we're now looking for previous support and old resistance, April resistance up to 0.8 pence, and looking for that well before the end of next month. The other point to note is the way that the shares have broken the 200-day line at 0.52 for the first time since back in March, and that's a significant thing. We already have the 50-day moving average rising, and you could class this as a double bottom followed by a sharp gap to the upside, which remains unfilled. This stage, only well below the recent broken resistance 0.43, really delaying the upside scenario. Gunsynd is next, and I know it's been doing good things. Here you can see that after it's been very, very messy, I presume a lot of people are still trying to get out when they shouldn't be, but a very decent end of week close there for the shares above the 50-day line at 0.15. We're looking at the top of the range and the top of that broadening triangle from last year, as high as 0.1 or 0.22, 0.21 or 0.22 by the end of next month. Moving along to Hydrogen Utopia, which has been called higher since around the 1.5s. We already noted that the shares were consolidating above a rising 50-day moving average in October. We had those three beautiful RSI 50 rebounds. We've had another couple for November, and obviously we gapped through the main resistance line there from November around 2.6 pence. Above that, we are looking for at least 5 pence. And what's interesting now is that you can see that above 5 pence, there isn't really anything before the old last year's resistance between 10 and 12 pence. Maybe that would be a target for the end of December or going into January. The reason for the relative enthusiasm, apart from the way that the 50 and 200-day lines are rising, is the way that we gapped up on Friday, opened at the lows and closed at the highs. That normally means there'll be follow through for at least the next session. And let's see if we can get up to 5p and then go from there on this situation. The other point is we've got effectively a saucer-shaped rebound or a W-shaped rebound if you include the June spike. So looking good there. SolGold is next, and we're already on to this even before the announcement on Friday, which was regarding a possible offer announcement. Was probably the exciting part there. Obviously, somebody here was already guessing that there would be a possible announcement, probably from, let's say, earlier this month, with the unfilled gap to the upside. That was the surprise, and maybe the target here could be the 2017 resistance line there at 35 pence, while we're above our previous target there. So I think that's the fourth target there at 26 pence. So who says the charting doesn't work or doesn't work at least some of the time? On to Supply Me Capital, which I'm looking at just because I looked at Amigo as well, the sort of basket cases situation. But here we've had moved through a rising 50-day line, which is around 0.003. We've got the 200-day line just below it. So if this wasn't Supply Me Capital, then we would be looking for the shares to at least head to the top of the range, about around 008 by the end of next month. But obviously, lots of things can go right and especially can go wrong here. But at least that's what the charting situation is at the moment. On to the last two. The first one is Unicorn, and here we had a bear trap gap reversal, so hitting a new low and then gapping up and not filling that gap, but testing the top of it, which is a major plus point, as is the way they've got that extended RSI 50 rebound. We've gone through the 200-day line there at around 4.4 pence and above that. Looking for a rather ambitious sounding target towards 11 pence by the end of next month. Not sure exactly what would do that, but at the moment looks very good indeed. In fact, the other point to note is that we gapped down back in August and gapped up in November. So that's a bear trap island reversal, one of the strongest setups around. So let's see if that, when combined with the RSI 50 rebound and the 200-day line break, will do the trick. Stock which I've covered from the lows, which basically was a bit like Hydrogen Utopia, actually gapping up in October and then finding support above a rising 50-day line, which has done ever since. We gapped up through the 200-day line, which is a flashy thing to do. And we've also hit our second target there. The first target was 7.7 pence. Second target at 14. And the third target, hopefully by the end of next month, on great news for the company, which you can read up on, at 27 pence by the end of next month, especially while we're on the right side of 10 pence. I think the what do you call it? The announcement on Monday, especially, was very strong for the company. That's it for me today. More updates during the week.